Hi there, Tony Sycamore here, Senior Market Analyst at IG in Australia. Well, US stock markets took a sharp tumble on Friday night following weaker than expected services PMI and consumer sentiment data, fueling concerns that the US economy is undergoing a slowdown. These issues were compounded by reports of a new coronavirus in China and higher than expected inflation expectations. This week, the focus of markets shifts to the Fed's preferred measure of inflation, which is the core PCE measure of inflation, with Fed officials likely to see evidence of lower inflation, which is a requirement they have stipulated before they consider cutting interest rates again. Elsewhere, Nvidia will release its Q4 2025 results on Thursday morning after the bell at 8:20 a.m. Australian Eastern Daylight Time. Nvidia options suggest a 7.7% move is likely after its earnings report, which says that we're likely to see the stock move from where it closed on Friday at around $134 to either $145 if it's an earnings beat or down towards $124 in case we see some earnings disappointment. Let's take a look at the key charts this week to see how they start the new week. Okay, so this is the Nasdaq daily chart. And what we're looking at here is we've been speaking about the importance of this 22,200 area, pushed marginally above there, but we could see that there was no real momentum behind the push. In fact, it was only up there very briefly. You can see this RSI bearish divergence here, and then it closed back below important support coming in around 21,800. I suspect we now have a false break higher in place. And what I'm looking for is for the Nasdaq to trade down initially towards this 21,000 area, which is being reinforced by this low from mid-January. Now, if that mid-January low were to break, then you've got some pretty important support levels coming in here. The 200-day moving average, which sits at around 20,128. And then below that, coming in around 19,775, is this uptrend support going back to the low in December 2022, which you can see here at around 10,000. Now, for the S&P, it's a similar story. We got a marginal break higher, but the retreat left it exposed as a false break higher. And if we can see the S&P break below 6,000, well, then it brings into play this 59.23 low from January, and then this 58.60 area here, which is from the uptrend from the Fed's pivot back in October 2023. So here's that pivot here, the 41.03 low, and it's coming in at around 58.60 at this point of time. A little bit below here, we've got the 200-day moving average. What I would say is if we did see a rebound and it was to get up above 61.50-ish, it probably suggests that the correction we've been looking for is complete and that the uptrend has resumed. A similar story as well for the Nasdaq. If the Nasdaq can get above this 22,200 area, then you'd probably say that the pullback has run its course and that the uptrend has resumed. But while below these resistance levels, I think you've got a nice pivot in place. As I mentioned, we've got this bearish divergence. We've got some macro signs of slowing in the US economy, as well as some geopolitical concerns out there. I suspect that it probably will depend on Nvidia's earnings, which, as we mentioned, comes out on Thursday morning. But at the very least, we've got a framework to work with in the lead up. Thanks for listening and have a great week ahead.